Infinite Banking for Dummies, Part 3. Today's topic is the 3-bucket strategy. Hi, my name is Sunny.
And I'm Alex.
We are the founders of Bright Horizon Wealth. Don't forget to leave a like and subscribe to our YouTube channel to get a new video every week on Tuesday and Thursday. In our previous video, we were talking about what is the best way to purchase a car, paying cash or finance it. Then we discovered that apart from these two popular methods, there is a third alternative which is not being exposed to the general public simply because it is not in the best interest of those banks. In today's short video, we're going to dig a little deeper as to what is the difference between a debtor and a saver.
Can you see 3 buckets here? The red one symbolizes someone who borrows money from the bank. The blue bucket represents someone who saves money for a while, then makes a purchase with it. And the green bucket represents a money maker. As a money maker, you use other people's money, in short, OPM, and then recapture your principal and pay all the interest to yourself instead of others. If you want to learn more about it, please watch our on-demand masterclass, which explains it in a more in-depth setting. A debtor is someone who borrows money from a creditor, has no savings, earns no interest, and they pay interest. And the continuation of this cycle over and over again keeps us in debt perpetually. Now, if you are a saver, you have the discipline to save the money. You fill the blue bucket and then empty it, and you start filling it up again. And this never-ending cycle keeps on going only to bring you down to zero every 5 years. Now, for the savers, we repeat this over and over again. How about the green bucket? As a moneymaker, you own the bucket. Yes, you heard me right. You own the bucket. And instead of putting your own money into it, you use OPM, which is short for other people's money, to fill it up. This is how it works. First, you finance the car with other people's money. Second, you recapture all your principal. And third, you pay the interest to yourself, not to them.
Let me share with you an interesting story that happened to me. In fact, it happened to my wife not too long ago. In the year 2007, she needed a new car, and at the same time she got a very good deal for a brand new Honda Accord just for $18,000 with a trade-in. At the Honda dealership, when she was writing that $18,000 check, her fingers were trembling since she never wrote such a big check before. The next day when she was driving, she turned to me and said, "Honey, I'm the owner of this car and it just feels so good." But then a sad thing happened just after a week. She was at the bank when she saw her account. It had only $180 left in there. That made her so sad that till today I remember that sadness on her face. The sadness weighed heavier than the happiness of buying a car with cash.
Here, let me ask you a question. Who do you think is better off, a debtor or a saver? Neither, because they both end up at zero. I'm going to repeat, they both end up at zero. So choose your bucket wisely. You are still financing your purchases regardless of whether you're a debtor or a saver. And by financing the car, you are either paying interest or you're losing your opportunity to earn interest by paying cash. The average American pays as much as $280,000 to $450,000 in interest in their lifetime, according to MarketWatch.com. If you just take care of that interest money, in your lifetime, you'll amass an extra $500,000 to $1 million. And this is the magic of compound interest, which, over the years, makes a big difference. And this is the huge amount of money that will come with certainty without working any extra hours. just by stopping the leak in the bucket. Oh, by the way, Einstein called compound interest the eighth wonder of the world. If you're interested to learn more in detail how compound interest works like magic and how easy it is to become a moneymaker, then check out our masterclass, which is the second link in the description below. Lastly, you don't want to miss the most important part of this series, which is fourth in the row next week. Look out for our next video, and make sure you own your own financial future,
or someone else will.